Good morning and welcome to Rising. We have an unbelievable show for you today. I don't even believe it. Briahna, make me a believer. What's going on?
I'll try my best, Robby. Well, we'll have a fantastic guest coming up discussing the root causes of why there's so many Venezuelan immigrants fleeing the country in the first place. And we will dig into Robby's new reporting on the end of federal vaccine and mask mandates at a Louisiana school. But first, yesterday, the Federal Reserve set in motion another rate hike in the fight against inflation. The Fed raised its key interest rate by 0.75 percentage points for the third time this year, which some say could break the dam on a recession. Here's Fed Chairman Jerome Powell making the announcement and signaling that more hikes are likely to come.
The FOMC raised its policy interest rate by 0.75 percentage point. And we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Bank CEOs balked at the aggressive price hikes while testifying on Capitol Hill and warned that the increases could actually cause a slowdown in the economy and could put millions out of work. As Senator Elizabeth Warren said, she fears Powell is on the path to increasing unemployment in the labor market. And while Powell has signaled more hikes to get inflation down, Fed officials forecast that rates will rise to 4.4% at the end of this year and believe that the rate of inflation will return to their goalpost of 2% by 2025, which is still a long ways off.
Yeah, and look, this discussion about how they are afraid it's going to push unemployment. There was an explicit commitment earlier this year that was the goal here, that unemployment was going to bring inflation down. And so we have been having this ongoing conversation, particularly on the left, about whether or not, quote unquote, saving the economy must come at the expense of the lowest tier of American workers, of working people and working families, or whether or not there are alternative ways to go about doing this. I've spoken to a number of progressive economists on my own show, and we've spoken to some here about alternatives, but it is distressing that there seems to be this openness about pursuing a strategy that is going to be so detrimental for workers, especially ahead of midterms.
Yeah, I mean, look, this is not good. We don't want unemployment to rise, obviously. I mean, some of us want to go back to the pre-pandemic economy times where we had a very robust employment and a very healthy economy and low inflation. It should be possible to accomplish all of these things at once. The government, is no stranger to trying to solve one problem, not really solving it, and making a bunch of others' problems worse. So, look, I think it's not necessarily a great thing, but we do have to get inflation under control. One way to do that is simply, or one way to, even if we don't get inflation under control on its own, we need to fix the gas prices, the food prices, all of that stuff through different policy, through ending the Ukraine war,
right.
And whatever else the administration can do, because just trying to reduce inflation and causing unemployment to rise again I absolutely understand why that's not really making the situation better overall.
Yeah, that's a really great point. What do we do about the cost of food and goods? Founder of Compound Capital Advisors laid out this comparison. 2 years ago, a 30-year mortgage rate was 2.87%, and the median home price in the U.S. was $310,000, compared to today, where a 30-year mortgage rate is 6.02%, and the median home price is $390,000, which means a $16,000 increase in down payments and a nearly 82% increase in monthly payments.
An op-ed over at Bloomberg predicts that this market volatility will largely distinguish the economic winners and losers of the decade into two groups, those who bought homes before 2022 and those who didn't, contributing to the widening economic inequality between homeowners and renters. The financial outlets also report that U.S. income inequality rose to broke records under President Biden, according to the Census Bureau. U.S. poverty climbed for a second year straight in 2021, and household income slightly dipped. Last year, 37.9 million people were in poverty, which is about 3.9 million more than in 2019. So it's not a pretty picture.
So first and foremost, Robby, can millennials catch a break? I mean,
we're the most persecuted generation.
We graduated, into the recession.
I graduated in 2010. Was, at times. You graduated in
I graduated from college in 2007.
Yeah.
Started law school a month after the market crashed, and everything we've been off to the races since then. And not to mention, obviously, the way that COVID has now affected the generation coming up behind us. When they say things like the have and have-nots are now going to be divided up between those who bought houses before and those who are buying houses after this crisis, what you're really saying is that entire generational cohorts are being locked out of the American dream, not to mention all the people, obviously, from older generations who are locked out as well. And since we've based our entire middle-class status in this country, your ability to attain middle-class status, on this one economic prong of home ownership, it's very curious to see what's going to happen as interest rates continue to be driven up, as people are increasingly locked out, and as rents start to increase at a dramatic level. Before, the cause of renters was not so much of a central bedrock middle-class cause in the national discourse, but as increasing portions of Americans are long-term renters for life. As when you talk about middle-class families, we were talking more about renters and not people paying mortgages. I'm curious as to whether or not we're going to have a different kind of discourse coming out of both parties.
Yeah, that's true. Although, to be clear, millennials disproportionately prefer to live in areas of the country where renting is more affordable than buying, or where buying has just gotten.
Well, that's a relationship, though, isn't it? Right? I would be happy to live in various parts of the country if there were the same kind of job opportunities there, if they were pay was as high there. Sometimes I think people talk about the idea of being able to just randomly move to the middle of Oklahoma and take advantage of a $200,000 house there, without thinking about whether or not you can get a job there that even enables you to keep.
Well, but the rise of virtual work is making that a lot more possible for a lot of jobs, and yeah, so that's that's a good option for more people. Should probably do that. Yeah. But also, it would the extreme political polarization that all like-minded people on the blue side have coalesced in cities, from a tactical standpoint, should spread out the Democratic vote to more places like Oklahoma.
Look, that's why my mom, remote work, the story that you just told us, why she just moved back home to Cleveland, Ohio after 20 odd years in New York City. So
I know some millennials who moved to Ohio during the pandemic.
All right, then maybe Tim Ryan stands a chance.
I don't know about that, but no, he stands. I'm looking. So I just finally pulled up the map where you get to make your predictions for who's going to win the Senate. I'm still putting that one very much in the Republican box, but I don't know.
We'll see. Look, I was a big Morgan Harper supporter. That was the progressive candidate in the primary. And if Tim Ryan doesn't, in fact, pull it out, and the argument was that Democrats had to rally behind him because he was the most electable candidate, I wonder what that does say about the messaging progressives can advance for themselves next time we're in a primary situation like this. We have
to make our maps before Election Day.
All right.
I'm very competitive about this. And I'm looking forward to hearing what's on your radar coming up next.